There are three main types of tax havens. In this first installment of the mini-series, we will see the so-called total tax havens. These are countries that have no major direct taxes, have no personal income tax, have no corporate income tax, have no capital gains tax, and have no inheritance tax. For example, countries such as Monaco, St. Kitts and Nevis, Anguilla, and the Cayman Islands fall into this category. These are just examples, as there are dozens of states that can be considered tax havens. To get the full picture, however, consider that some of these jurisdictions impose small fees on company and corporation deeds or annual company registration dues. However, these are fixed costs and are generally very low. There may also be import duties or local sales taxes, equivalent to VAT, generally with much lower rates than those applied in Western states. In most cases, these countries allow you to live with a significant level of freedom and minimal government involvement in your affairs. In the next installment of this mini-series, we will see another type of tax haven, which allows residents to pay no taxes on their earnings from abroad, and therefore to pay no tax if the whole of your earnings comes from abroad. If you need specific advice, you can contact us at the addresses you find in the description. Remember that laws change all the time. Therefore, it is essential to check the law in force when you decide to relocate or move abroad. It is also very important that you speak to your international tax attorney before starting any type of tax planning or relocation of your business. Do not hesitate to contact us if you would like us to provide you with the contact information of highly qualified tax attorneys who are specifically qualified to help clients in your situation.